The CTKS risk indicator is starting to weaken. Looking at global markets, they're also weakening. When we look at the put-call ratio, we can see that the market is becoming increasingly bearish. Why would this be the case? When we look at the DXY is starting to bottom out. Potentially, we've put in a higher low on yields as well. We can also see potentially we've put in a lower high on bond prices. Is the market reflecting that when the Fed meets at the FOMC meeting, the 25 basis point increase will spike the DXY, spike fear, and cause the markets to come down? Inside the DXY's objective dynamic market structure, there are two levels that you need to keep your eye on. We can see recently that we've been continuously rejected around the 101,750 level, and we've seen continuous support from the 101,003 to 101,330 level. The DXY is currently trading at 101,458. If the Fed raises interest rates by 25 basis points, which is anticipated, we'll likely end up bullish on the DXY. We can see that there's an 85.4% probability that at the next FOMC meeting, a 25 basis point increase in the federal funds rate will be on the table. The S&P 500 has entered a smart money sell zone. It closed out at 41.35, but the sellers are active between 41.06 and 41.65. If we see a spike in the DXY, we would anticipate a rejection and a movement down inside the S&P 500, something to bear in mind. When looking at Apple, the consensus earnings throughout 2023, 2024, and 2025 look pretty good. They're all increasing. And we can see that Apple is heading towards the bullish end of month closeout at 172. You should also bear in mind the Q2 2023 and Q3 2023 for Apple expect lower earnings. This will place negative momentum on Apple's share price. Many people inside the crypto industry only look at crypto and they're trying to find reasons why crypto sold down recently. Every market is intercorrelated and interconnected. The reason that the Bitcoin market, the crypto market, sold down was because the S&P 500 expected negative momentum, as was reflected by the S&P 500 futures. And we've seen a bit of a bounce in the S&P 500 futures, which is very positive for the main market. But we can also see when we look at the Stanfield levels of $30,048 and the other one at $27,936, price has been bounding between those levels. When we look at a 4-hour perspective, we can see that Bitcoin is trying to overcome this resistance, trying to get above it. But what actually occurred is that there was a smart money sell level at $30,048, and the sellers have been pushing the price down. We know that Bitcoin is bounding between two ranges, and this is what it does all the time. The key things to keep in your mind: if we actually take out this $30,000 level, that's very, very positive for Bitcoin. But if we drop below $27,936, the bears are in control. Provided that the S&P 500 breaks over its resistance, that the DXY is rejected at its resistance, we would expect Bitcoin to make its way up to 33,300 by roughly the end of the month. The markets are going through a little bit of an undecided stage at the moment. We've seen the fear gauge in the main market coming down, but we've noticed that there's not a lot of confluence between that and other measures. For example, yields are coming up. The DXY is just flattening out. And even though we had a very big reduction in fear, the actual increase in the major indices was very, very slight. If the VIX starts to spike up, we would expect the DXY to spike up and yields to also spike up, placing negative momentum inside of crypto, inside of the major indices, and inside of the stock market. We would expect the exact opposite if the DXY comes down, yields come down, and the fear gauge comes down as well. It's very important to look at all the charts and understand how they're connected. The price action with Ethereum is basically consolidating price action. If this continues, we would expect Ethereum to close out the month around the 1838 level. We can see that Ethereum's price is slightly bullish. We can see a similar thing with XRP's price, which is currently 46.51. It's slightly bullish at the moment. Looking at Dogecoin, it's basically following the consolidation route, and we can see it quite closely pinging this particular line. It's on track to close out the month at 798. It's currently 800. The critical thing to understand, if the VIX spikes, the DXY spikes, yield spike, we would see negative price momentum inside the crypto market. If it does the opposite, we would expect bullish price action. This is why it's very important if you're in crypto not to just look at crypto. You must look at the main markets. The markets are currently very turbulent. We've seen big swings to the upside and to the downside. The shorts are actually showing a lack of conviction just at the present time, even though when we look at the put-call ratio in the equities market, it's going up. Remember that all markets are intercorrelated and interconnected. If you're looking at one market and ignoring the others, you do so at your financial peril. Recently, a lot of shorts have entered the crypto market. If the longs start to come back in on the understanding that Google, Amazon, Meta, so many companies are reporting powerful earnings, especially into 23, 24, and 25. This could cause the longs to come back into the market and liquidate the shorts. The question is, will the Fed throw a spanner in the works? It's vital that you understand how financial markets work. If you don't have the foundations, if you can't look beyond the charts and see how they're all intercorrelated and interconnected, if you can't find the market's focus and you're not sure about pattern recognition, you'll be in trouble. If you can't focus on mastering fear and taking fear out of the buying and selling equation, again, you'll be in trouble. There's so many ways to buy and sell. That's not the problem. The problem is having knowledge how to do it. Doing your daily three-dimensional risk management code is a very powerful way to get into sync with the market. Financial markets are composed of millions and millions of participants. When you gain, it's not that another person has lost, it's that the other people weren't in sync with the market and you were. Recently, I've seen people with trading bots extolling their virtues and basically saying, you just need this trading bot and you don't need any knowledge. If you want to blow all your money, that's a good way to go. Please let me know in the comments, what percentage of success inside financial markets do you attribute to knowledge? What percentage do you attribute to mindset? And what percentage would you contribute towards luck? The three added together should equal 100%. One thing to bear in mind, Warren Buffett does not use trading bots. He spends so much time reading every day. What does he spend this time for? Because he knows that knowledge is critically important. And when does Warren Buffett buy? When there's blood in the streets, including his own. Unfortunately, we live in a day and age where instant gratification is the norm. People just don't put in the time and they wonder why they don't get the results. If you don't know what you're doing, you cannot be successful in any endeavor. If you gamble, which basically means you don't have the knowledge, you may win short term, but you will lose long term. The markets do not exist to transfer money between losers and winners. That doesn't work that way. It's not what the financial markets are all about. Financial markets just reward your synchronization. They reward your knowledge. They reward the depth of analysis that you do each and every day. And they reward your mindset. I'm zooming into the 5-minute time frame to show you this big drop off in Bitcoin's price. That was following that really nice ramp up towards that SL that absolutely played into Bitcoin's price action. What you can see is Bitcoin has been recovering. What do we see with Ethereum? Slightly weaker. Noticeably, Binance Coin is much weaker at the current time. We generally look at BNB as a forward indicator of risk-on or risk-off sentiment as far as centralized exchanges go. If people were looking to get into the crypto market, they would be funding BNB because it saves fees on trading and investing. We're not seeing that at this particular time. We can see that Bitcoin has outperformed XRP. When Bitcoin outperforms an alt, what does it mean? It means that there's scared behavior inside the crypto market. It means that people are looking at Bitcoin as the go-to crypto to get into. When we look at ADA, we can see ADA has been very strong recently. Doge, a little bit of weakness. Matic has been quite weak, but starting to catch up. Solana is a very explosive crypto to be a part of. It can explode up and it can explode down. Always bear in mind, where you buy dictates your profit. The markets are throwing all sorts of signals right now. They don't really know where they're going. There's a lot of uncertainty inside the market. Of course, in the long term, we expect bullish price behavior. But in the short term, we're a little bit uncertain as to how things might go. That's basically because we're coming up to some key resistance levels. As soon as price exceeds those resistance levels, things will become much clearer. In Zone 1 and Zone 2, people want instant gratification. They want the answers here and now, and they want certainty. Unfortunately, they make one-way decisions. One-way decisions, it's going to the moon or it's going to zero. We don't subscribe to that because we understand Rule 4. Price moves in waves. Price is always going up and down. This is baked into financial systems. It's nothing to be concerned about, but it is something to benefit from if you know how to BORSOG. BORSOG is Rule 621. Buy on red, sell on green. And there's BORSOG, the price eagle. BORSOG loves to swoop down to catch his prey. That's buying on red. Buying on red can be especially difficult to do. Psychologically, we're not geared to do things like that. We're geared to buy on green. When the red comes, it can come very quickly. It's very important to have a positive excellence focus. And that's a focus not on money, but on doing the right things. Masterclass students, it's all about knowledge transfer and looking at as many charts as you possibly can. As Sinman said, charts tell the whole story. Sinman also said, everyone on crypto Twitter was looking for a reason why the flash crash yesterday happened but couldn't find one. With CTKS, I can list many reasons why it happened and don't need news headlines to explain it. Like we've said many times, charts tell the whole story. Thank you, my friend, for your kind comment. What we're all about inside our community. We look broadly and deeply. We prepare ourselves for volatility and also opportunity. Each day we actively learn, and thank you very much, Jay Ling, for your comments there. And also to everybody who commented. A big thank you also to Tiana. With positive excellence, one of the best things that we can be is prepared. Built to Spill in yesterday's comments said we retested the smart money 30,000-ish level and I was prepared. I was in sync with part of my portfolio and grateful to be rewarded. Trading and investing can be very frustrating endeavors. That's why it's important to focus on things like gratitude. Having gratitude each and every day is like money in the bank. Financial markets are very volatile, as Art said. Being prepared and being grateful to be inside the market is really important. As Purpuratum said, it's really important to focus on strength and weakness inside the markets, because the strong can become weak and the weak can become strong. The key with life is to be kind to others and be kind to yourself. This is a very important rule to apply. I would suggest that something that you can focus on today with positive excellence is just gratitude. Find something or someone to be grateful for or to show gratitude to. and then watch how it actually improves your life. I'd love to hear how you go in the comments. Expect some volatility inside the market as the Fed draws ever closer to the next FOMC meeting. In the lead up to the past FOMC meetings, we've seen many run-ups in price. Just be aware that this can happen. And always be aware, there are always opportunities inside every single market. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.